As of November 20, 2024, gold and silver markets are showing strong performance driven by macroeconomic factors and technical breakthroughs. Gold has reached record highs supported by a weaker US dollar, central bank buying and easing US monetary policy. Silver has surged up 35% year to date, boosted by a major technical breakout and growing industrial demand, particularly from renewable energy sectors. The outlook for both metals remains positive due to inflation hedging, central bank rate cuts and geopolitical uncertainties, though profit-taking may lead to short-term volatility. G'day folks, welcome back to another update on gold and silver. Before we go any further, make sure you hit that like and subscribe button and to support the channel. That would be greatly appreciated. And if you want some more insights, go to the end, stay to the end of the video and you'll see some Patreon video updates there. Now first we'll look at silver. Now we'll look at the monthly, weekly and daily trends. So on the monthly, you can see here our CCI is well above its moving average, giving us a bullish momentum. Likewise, the price is above the moving averages, so bullish on the monthly. On the weekly, however, it's broken down past that CCI 150 moving averages, giving us a bearish signal. And you can see there the price is also in between those moving averages at the moment. It looks like it may well possibly decline further from where it is at the moment. But also notice we've got this bearish divergence, lower highs on the CCI versus higher highs on the price. Now that actually came back and hit our initial target range, and it's currently sitting in that target range. And for those new to the channel, what we do is we draw from that high where it retraced, and we draw a Fibonacci retracement. We'll take it back to that low there. That's at 23.38% target range. We take it back to the previous low, significant low before that divergence started, and that's how we determine that minimum target range. Of course, it could go further or it could actually bounce from there, so we'll take it one step at a time, but at the moment the weekly is showing a bearish momentum. On the daily, it did actually bounce off this resistance at 34.87, broke through that previous resistance at 32.96 and currently bouncing off this support at 30.11. Now you'll notice as well the CCI is breaking through and in between those moving averages on the CCI, and that's a neutral positioning, and it's about to possibly break above that. On the price chart as well, it's still below the moving averages, so again, to be more positive and confident, we want to see both the CCI and the moving averages of the price be breached and broken to the upside to be more bullish. Now if we go to the intraday chart, and the strategy here is we only trade on the intraday or the lower time frame, dependent on the higher time frame. So here we're looking at the 1 hour and we're trading in direction of the daily. So at the moment we don't take long or short trades because this could actually, on the daily, it could actually keep turning to the downside. So we avoid going long or short until we see this either break above that moving averages of the CCI to go long, or wait for it to break below those moving averages to go short. You'll notice here as well, on the 1 hour chart, the CCI is fluctuating in this range and it's currently broken below the moving average range. So that's a bearish signal, but don't go short yet until we see this break below that moving average on the CCI on the daily. Alternatively, if this breaks higher on the 1 hour and the daily also then breaks above that moving average range, we take long trades. So at the moment, it's actually bounced off that minor support at 30.11 and this major support we had previously drawn at 30.57. In the interim, it actually may come back and gravitate towards this support level, possibly. So I'll keep an eye on that, but at the moment we take one step at a time and stick to the strategy. So this is the gold price. So we've got first off the trends on the monthly, weekly and daily. So the monthly first off, still very strongly bullish, as well as on the price chart, very strongly and hitting those new highs, as we said. On the weekly, however, it's broken below the moving averages, giving us a bearish momentum. And again, you can see there's a bearish divergence, lower highs on the CCI versus higher highs on the price. That actually hit our target range as well, similar to silver, and currently resting on those moving averages. Now, it could actually bounce from there or break through further below that minimum target range. Again, we take it one step at a time, so the weekly is showing a bearish momentum at the moment. On the daily, we had a few divergence back here. You can see those trend lines, and I've marked each of those target ranges being hit. Back here you can see there the bearish divergence worked, hit that little target range and it bounced. Another bearish divergence just touched that target range and it bounced, and at the moment we're sitting on this other well, it's actually broken through that previous target range on the latest divergence. Lower highs there versus higher highs there, broke below, hit that 23.38% target range. The price broke below and bounced off the 50%. Like I said, sometimes it breaks through that minimum range. In this case, it bounced up off the 50% level and now making further moves to the upside on the daily. You'll notice the CCI is also in that mid-range of the moving averages, giving us a neutral signal. So again, hold off going long or short until we see this become more decisive in the coming days possibly. Now if we go to the intraday chart, again, trading only in the direction of the daily. If you're trading the hourly, we don't take long or short trades because of that neutral positioning. But you'll notice here, for example, there was bullish movement and still is bullish momentum on the CCI versus the same thing happening on the price chart. By the way, when the CCI normally tracks with the price, that's normal, unless you see this thing happen, this divergence happen. You can see here higher lows on the CCI versus lower lows on the price. That gives you an indication that the price is going to bounce, and at the very minimum, hit our minimum target range. Now, I haven't drawn a target range here. Let me do that, because the previous video we did draw at that point there. It started to bounce, and it confirmed since that last video. So if we draw a Fibonacci, so if we take it back to that range, you can see that it's already hit the 23.38%. But let's take it back to that key resistance up there. You can see there, if I draw a target range, 23 to 38% level, it's actually penetrated that 23-38% level and now moving higher. So there's no guarantee it's going to keep going. Again, we always take one step at a time and take trading in those directions in line with the higher time frame directions. So you can say here, for example, when the price was declining on the daily, you would have taken those short trades when the CCI was below its moving averages, and also when the price was below the moving average. So you would have taken a short entry from that point there on the price chart, where the CCI is also below the moving averages. And I prefer to close it out when the CCI breaks in that moving average range, because you notice there it's almost near the bottom there, and you would have taken nice little profits, as opposed to letting it ride to the moving averages of the price chart. You would have lost a few pips in that retrace. Likewise, going short again there, that would have been a small little profit take, another short entry there, another small profit take, and another short entry there with a nice beautiful profit take, with closing out right near the bottom of that range there. Now the price did fall further, but notice again, let me just get rid of that Fibonacci. You'll notice here as well, if I zoom in, that's where, if you're following this on the hourly, that higher lows on the CCI versus lower lows on the price. So had you been going short there, at the very least you should have closed your position when the CCI broke into that moving average range there on that candle. That was near the bottom of that little range, and that would have been a nice little profit take to go short. Now the price did break further to the downside, but notice what was happening. You got higher lows on the CCI versus lower lows on the price, and the price then started to bounce. So I use these predominantly in this situation to take profits when I start seeing a divergence, if I'm still in a trade and if I haven't closed it out, if the CCI hasn't already broken into that moving average range. Now here you would not have advised against going long in this scenario. You could have gone long, and that would have been a nice little profit to take there and close it out on that little red candle. But notice the CCI is rising on the daily, but it hasn't actually broken above the moving average range. So just be very careful. Sometimes you can enter that range and then start falling again. So I like to see confirm and break to the upside, unless there's sometimes you got false breaks like you do back here. But again, it's all about probability when you do trading. There's no guarantees. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.